Losing money sucks, but in this video, I'm going to show you exactly what you could be doing on a daily basis to be learning from those mistakes to hopefully make sure you're not making them again. Before we get into this, I want to hop in with one quote right off the bat. Pressure is a privilege. Understand that anytime you're going through a downturn in performance or even a struggle or a bad day or whatever it might be, that's a privilege. The fact that we get to sit here and speculate on whether stuff goes up or down and lose money while doing it, you got to be appreciative of that fact. So let's hop into this. These are the numbers. Not great. I've done better. I've done worse. But looking at what we got here for today is what we're going to be learning from. So 0 for 3 on the day, primarily around 3 main ideas. Really just one bias though. I did not flip back and forth. I was pretty clear on wanting higher prices. So when we look at this, what do I see? Well, it goes without saying it's a clear lack of edge, or at least edge decision making. When I'm looking at this, I see the fact that 3 losses, is that really necessary to prove the point that I was not right on the day? Could I have been fine with 1, maybe 2? But we'll go ahead and dive into this and see what we see. Were these losses due to normal distribution of wins and losses within an edge, or are they simply the result of poor decision making, bad trade structure, or so forth? So let's see what we got. This is trade number 1. I did a little bit of a pros and cons list for each. Right here, the main premise was I saw that the daily chart is relatively extended in terms of overall percentage down on the NASDAQ. When you start to see moves that are somewhat extreme, it's more likely each day, minute, week, so forth, that it moves lower, that it's more likely to bounce. It's getting to a point where it's likely to bounce. It just wasn't right there, at least when I entered the trade. So that's number 1. There was multiple time frames in alignment. I like this on the first trade. I thought the 5 minute, the 1 minute, they look great. It was aligned with the 15 potentially moving higher. And there was multiple lower time frame confirmations. We saw that there were some sweeps of lows. And typically what I like to see is a run below an old low, a run below above an old high, either or. And then I like to trade against it. It's the basic premise of a failed breakout. People like to overcomplicate it, but at the end of the day, it's all the same stuff. And there was an extra layer of VWAP. I thought potentially if there's going to be some sort of strong bullish sentiment, that VWAP would be important. On these higher volume days, not even necessarily higher volume, but higher movement in the index, I find there's a greater correlation with VWAP in it working with price. It goes without saying that VWAP works with stocks in play. When you have stuff that is trading multiple percentages higher than its typical relative volume. With the index, though, in general, it's pretty robotic. So you don't see as much correlation. Like I see VWAP get cut through a lot. But in this scenario, it fit what I was looking for. And then, of course, the cons. I was in profit, and I protected none. How can I do that? How could I be up a good amount? The trade gave me room to place my stop in profit. Why did I open the stop? Why did I leave it there? What's going on with that? That's what I need to figure out. Again, looking at the second con, there was a sweep of highs. The reason that I got in was a sweep of lows. And then I get a counter signal of, a sweep of highs. Why would I stay in that trade? Is that not giving me a strong indication that based on the entry logic that I use, someone else might be using that to do the opposite? So it goes without saying there was a drastic shift in the expected value of continuation higher. How could I reasonably expect price to continue if we are failing to break those London give or take highs? And then also it laid the framework for the fact that we were number 1 above midnight open. And because of that fact alone, it is very likely that we do trade lower. So even if the bias ends up being right at some point, I have to be out of that trade. And there's no reason for me to retain a full stop on here. So that was my first and I think most important error of the day, because had I done this a little bit better, maybe I would have been a little bit more controlled when it came to my second and third, my following trades. Why did I not manage this effectively? Is this something that you know, I look back and it's not something that I've done historically, but I notice more often than not in 2025, I have this tendency. And it's quite frustrating because it's not that you're not taking good trades, it's just you're not securing anything, and then it doesn't reflect on your results and you go, why am I doing that? So we'll look at some more material right here. These are some reference charts just to kind of help you digest what I'm talking about. That's the daily chart I had just mentioned. You see, it doesn't look great. It does not look great, but the idea was that we could potentially trade above prior day high, you know, the candles to the left, and reach into that area. This is also a 5-minute chart I'm providing with, if you look to the right side, you see a 15 and an hourly. I have midnight open for New York Eastern time zone. That basically is showing me that if we're trading above here, it is very likely for us to come back lower. This is a tendency that we kind of look at. VWAP is shown here. You see the trade lines up pretty well with VWAP. There was also an inversion fair value gap along with that sweep. So those are the levels I was looking at. Based on that, it seemed like a good trade, but I got a very strong counter signal. I don't know why I decided to stay in that trade. So yeah, that was a huge flaw on my part. Trade number 2. So, going in line with the logic from the first one, the daily chart was extended. I am of the belief that we are likely to see a bounce at some point. It just wasn't right there with that entry. This was approaching a key level, the new day opening gap, which I'll show you in a second. There was also clear upside levels. These are just the same levels I had mentioned. We'll go over those afterwards. And I also had anticipated the New York volatility to be a benefit, meaning if I'm in the trade and I'm positioned, the volatility could work in my favor. The cons of this trade, however, I basically took the same loss 3 times. While the bias is still right. So not only did I not capture any upside from the trade that I was correct on, I managed to capture 3 times the downside from the trade that I was correct on. Why did I do that? So it really comes down to the trade structure. After we had swept the highs, like I had mentioned, the expected value of continuation higher fell off a cliff. So now I'm buying on the backside of the V from the sell-off in the morning, and I'm also in front of the right side of the V for the buy after the open. So there's 2 key rotations that are occurring here. I'm positioned correctly on the trade 1, on the first entry I took. That was fine. I messed up when I took it to a full stop. I could have trailed that more effectively. Then getting in here on number 2 for the second trade, there's a couple executions here, but it's the same core idea. So I'm now entering on the backside, aka the failed breakout. That's not where I should be buying. If anything, I should be thinking we just failed the breakout of London highs. I should be flipping my bias to trade back towards that level that I had noted and that I had on my charts. So with all that being said, this is just a low probability waste of risk. What am I doing? That's like the key question I have for myself today. What am I doing with this? Is this representative of a larger issue? Am I letting other trades influence my decision making? Am I developing bad habits based on some of the types of market structure we've had lately? Why am I leaving risk on the table when I can effectively remove it? Am I what is my focus and what are my goals? So, and the cherry on top is this is also an inside day. So inside days where you're inside the previous daily range, they have a tendency to be choppy. This is something that I know very well. It's near and dear to my heart. I've lost a lot of money on inside days. So I've had the better judgment to avoid most of them, but in this scenario, it didn't register as important as it should have in real time. Once again, we have some more reference charts. We have the daily right here and then the 15. So very easily you can kind of see that we have those highs right there. We did not break above from London. That VWAP rally, it worked to an extent, and then we dug lower. Once we dig into that blue gap, this little blue area that I have annotated, this isn't it's nothing special. It's just genuinely the gap between the CME close and the open. It's like a 1 hour time period. But sometimes there's a gap up or a gap down in price. And more often than not, this will have the tendency to act as support. Or, in the other side of the scenario, it act as resistance if you're below it. And then trade number 3, keep it short and sweet. All the same pros that I had from the previous 2 trades. And then also just the location now. right? We're at the new day gap. This is the area we're at. The cons are there's a clear decline in my execution abilities. Why am I executing so poorly right here with very unrefined logic? And how do I avoid this ultimately in the future? That's always the question you have. If you take a loss, what can you learn from it? Is it avoidable? Is there value in it? There's always going to be value, but most losses are also avoidable. When we get into the cons of it, it's really just gluttonous losses. Like, I don't need to be taking the same loss to get the point. If I'm wrong, I'm wrong. So yeah, that's really the bread and butter of that. Sidelined after this trade just based on my personal risk limits. I said that's it. So did I miss out on greater opportunity because of my poor execution ability? Yeah, and that's the domino effect. You have one bad trade, it might lead you to take an unrefined trade, right? Because the first trade was solid, I managed it poorly. The second trade was less refined, and it accumulated more losses. And then this third one is just the de-evolution of the system. So that's a common tendency that I will have and that I see with lots of traders that I work with even. The more trades you take, the more likely you are to make mistakes, because most people don't win and then win and then win. They more often than not lose, then lose, then lose. So what the fuck? No, seriously, let's start from the beginning and see exactly what went wrong. The main mistake of today, I went from green to red on my first trade. Not a good start. When I look at my 2025 results, I find that is a common tendency. I personally would say it's attributed to some market conditions, but it's also my responsibility to adjust to those market conditions. And, it grinds my gears. I don't know how else to put it. It is the most annoying thing that I could possibly do on the charts. The second part, yeah, I got a little bit fixated on bias. I had an expectation that we'd run a specific level, and we didn't even really reach that. We got pretty close, but we didn't get the level. I could have potentially structured different trades that aligned with the current market information instead of being so fixated on that North Star. You don't need that highest high or that lowest low. You can trade any of these partial moves, and that's perhaps the approach that I should have taken today. If I want high probability outcomes, I need to ensure that the low is in. So when I'm saying that I'm fixated on bias, if I'm buying and price still needs to trade lower, then that bias is harming me. I need to adjust and say, okay, if we're not yet at the low of day, then perhaps we could even take a trade to there, especially when we're in these, somewhat ranging conditions on the smallest of time frames. And last but not least, lost in the sauce. So when I came into the third trade, that lack of focus, clarity, precision that I tend to pride myself on, it just wasn't there. I was too focused on, honestly, noise. What was going on in the first 5 minutes of the open today? There wasn't a high probability trade. Why was I so fixated on being positioned? The location worked, yeah, but it wasn't my model. And that's the main thing that I have to kind of reflect on. So what are some action steps that I can take? And these are the same things that you can apply to your trading whenever you might have a downtime. I find too many people, they'll spend all of their time on here telling you exactly what they did right all the time. But I just look at it and I'm like, oh, so you never do anything wrong? That's insane to me, because I don't believe that. If you spend any time in the markets, you'll realize that these markets are far from perfect, and that anybody who tries to portray that as such, they're deceiving you. Markets are not perfect. Humans are not perfect. We make mistakes, and that's why it's important to reflect on these mistakes and create action steps that you can move forward with. Very short and very simple. The right side of the V. I can just take a step back and even just look at a 5 minute. And with the most unrefined, brutal entry on, a closure above VWAP on a 5 minute candlestick with a stop below some of that consolidation, you'd outperform any sort of micro time frame scalping, honestly, a majority of days, especially days like this, because what is really changing? If you have a directional bias, maybe that directional bias will last you an hour. Is there really going to be a change in that or an invalidation in that on a 1 minute inside of some sort of consolidation? Like anything that happened at this low, you know, it really just composed this wick right here on the 15. That wick did a lot of damage, and that is the tendency of a wick. It will stop people out in both ways, regardless if they're right. And that's ultimately what helps facilitate these swing points. So I got to take a step back and ask myself, has the high or has the low formed? Whatever my bias is, right? Is there a high probability structure that I can then base a trade on? I don't need to catch the lowest low. I don't need to be in first. I can simply just wait for clarity. And I think that is the missing part, because these markets have been quite noisy, to me at least, right? There's some people who are doing great, and everybody will have their seasons. But right now, it's not my cup of tea. Forget about it, right? That's the next thing. This happened, cool. I make a video, maybe it helps you guys. But the premise is, and this is something that I find myself to be really good at, I'll take a loss. I'll have a bad day. And then the next day I come back and I'm fine. You know, you have to be able to forget about it. It doesn't mean that you're going to go in the next trading day and kill it if there's no market structure that will provide a good setup. But if you do something wrong, the one thing you have to focus on the next day is just avoid that one thing. You don't need to fixate on the results. You don't need to fixate on this or that or the other. Just focus on doing one thing better. So for me, it's like precision, right? Focus on a clear idea. That's all I need to do. I don't need to make anything. The money will come. Trading is what we have to do. We don't get to choose how much money we make. We get to choose how well we execute. And that in turn will generate money over a long period of time if you have a consistently proven edge. That's all I got for you. So hopefully you learned something, went over some of my results today. If you enjoyed this video, please share, like, subscribe, and we'll talk soon.